This is the moment every warning was pointing toward, the moment when the theory stopped being theory and the system finally showed its fracture. Silver did not just rise today, it detonated. A 10.21% move in a single session is not a rally, it is not bullish enthusiasm, and it is not speculation. Commodities do not behave this way unless something has catastrophically failed. The price of silver trading at $79.25 is a signal flare fired straight into the heart of the financial system. This happened during Ghost Week, the thinnest liquidity window of the entire year, when markets are fragile and any real stress is instantly magnified. What you saw on the chart was not price discovery, it was forced buying, the kind that only occurs when a massive short position collapses and the clearing system takes control. Somewhere in the world, a major player just went to zero, and the market absorbed the shock in real time. That vertical candle is the footprint of a liquidation event, a financial death spiral playing out at machine speed. And silver was not alone. Gold trading above $4,500 confirms this is not a metal story, it is a currency story. The dollar is weakening, confidence is evaporating, and the paper system is losing credibility by the hour. In this video, we are going to break down exactly what caused this violent move, why a 10% day changes the rules permanently, and why the calm you may feel right now is the most dangerous phase of all. Because when markets move like this, they're not signaling opportunity, they are signaling consequence. What we witnessed was not a normal market move, and it cannot be explained away as excitement or momentum. A 10% move in silver in a single session is a structural failure signal. Commodities are deep, liquid markets designed to absorb stress slowly. When silver jumps vertically to $79.25, it tells us liquidity vanished at the exact moment demand became mandatory. This happened during Ghost Week, when trading desks are thin, senior risk managers are absent, and algorithms dominate order flow. In those conditions, the market becomes fragile. There are fewer sellers, fewer bids, and almost no shock absorbers. When pressure enters the system, price doesn't climb step by step, it gaps, snaps, and teleports. The chart printed a vertical candle because negotiation disappeared. There was no "I'll sell at this price." The market was simply forced higher to find anyone willing to part with metal or contracts. This confirms years of warnings that the silver price was artificially compressed by paper volume. When that volume disappears, even briefly, the real price asserts itself violently. What broke wasn't silver. What broke was the illusion of control. To understand the violence of this move, you have to understand forced liquidation. In a normal market, buyers and sellers negotiate. In a liquidation, that process ends. When a large short seller can no longer meet margin requirements, the clearinghouse steps in and takes control of the account. From that moment on, there is no strategy, no patience, and no discretion. The algorithm has one command: close all positions immediately at any available price. It doesn't care if silver is $75, $79, or $90. It buys until the position is gone or the account is zero. That is what creates vertical price action. This morning's move tells us that a massive short position imploded all at once. The volume spike, the speed, and the lack of pullbacks confirm it. This wasn't thousands of small traders buying. This was one or more whales dying. And because it happened during the thinnest liquidity week of the year, there were no sellers to absorb the demand. The order book was consumed in seconds. This is the exact mechanism of a real short squeeze, not speculation, but mechanical failure. This event didn't occur in isolation. Silver's move is part of a broader breakdown in confidence across the financial system. Gold trading above $4,500 confirms that this is not about one metal, it is about currency stress. The dollar-based system depends on trust, stability, and controlled volatility. A 10% commodity move shatters that illusion. Banks and funds rely on leverage, predictable ranges, and margin math that assumes normal behavior. When prices gap violently, collateral models fail. Margin calls accelerate. Risk departments panic. And once that cycle begins, it feeds on itself. At the same time, physical realities are tightening. Industrial users don't hedge forever, they need metal. When paper prices disconnect from availability, physical demand bypasses exchanges entirely. That drains inventory and increases replacement risk. The system is breaking because it was built on volume, leverage, and confidence, not on physical backing. When confidence cracks, price doesn't adjust gently. It resets. What we are seeing now is the early stage of that reset, where paper promises start losing authority to real-world constraints. Closing at $79 during Ghost Week places the market in an extremely dangerous position. If silver holds anywhere near this level into the Sunday open, the probability of limit moves and exchange intervention rises sharply. Markets are not designed to handle sustained vertical pressure without halts, rule changes, or emergency measures. That doesn't mean the move is over. It means the response becomes political and administrative, not economic. This is the phase where systems freeze, trading is restricted, and explanations replace transparency. The most important thing to understand is that panic does not start with chaos. It starts with disbelief, then denial, then sudden realization. We are between denial and realization right now. The system didn't glitch. It revealed itself. Whether prices pull back or surge further, the message has already been sent. Suppression has limits, leverage has consequences. And confidence once lost cannot be forced back into existence. What happens next will not be orderly, and it will not be quiet. The rules didn't bend today. They snapped.
Hello friend, welcome to my YouTube channel. I hope all if you are doing great and having an amazing day. My name is Noor Baqi and I am really excited to start this new journey with all if you. You know this channel is not just about videos, it is about story and ideas and inspiration. I created this channel to sharing something positive every signal week. Sometimes we all need little motivation, and sometimes we just need a good story to smile again. Decide exactly what this channel is all about. You find understanding stories, real life experience, and powerful lessons that again change the way you think. I be uploading new videos regularly. So if you don't want to miss any of them, make sure to subscribe to my YouTube channel and press this bell icon so you get notification whenever you post something new. Your support means everything to me, and to great we can build a community full of partnership, learning, and good vibes. So sit back, relax, and let us begin this amazing journey together. Thank you so much for watching and welcome once again.